Hey, it's Mike with PriceActionTradingSystem.com, and it is Wednesday, I believe, October the 24th. This will be our chart lesson for today, and it was all downhill again today. Another big sell-off. Notice that you got one big leg down here, and you got this correction, so that's probably going to be the middle of your pattern. You look for a low there, and notice how we bounced right there at a perfect measured move. We ended up going lower than that after 2 o'clock. We took some of that back, but market was down huge. I mean, we're down in the 26. I mean, we were down into 2650 basically today. I mean, it wasn't very long ago. We were bumping 2900. So we've got a huge sell-off, but that would have at least kept you on target to this into 2 o'clock hour for this measured move, and that's basically a perfect measured move there. Um, but it's two tiers here, but really you need your shorter term stuff. And once you went through this, see this shorter term channel here, once we go, just get a equal distance for this, and maybe this is a midline, and you draw equal distance, and we bounced right there. Notice how we overshot the channel line here, but it was because it was headed for this other target, and it bounces off it, and we go higher. This thing is just really weak right now. But the thing about it is you'll see some really strong rallies like this, even in a bear market, and you may get a day that just goes straight up all day. So watch for those, and don't, be prepared for them because they'll probably come. Here's another big rally up right there. Just huge. I mean, it was a huge rally down, huge rally back, but that's in the overnight, and it's easier to move the market like that during those times. But I'm going to back out. Quite a few trades here. I want to get through them. One thing I want to say real quick before I move on to the trades, and I'll probably move through the trades pretty quickly because I'm going to take up a few minutes telling you this. But I keep getting questions about how big the signal bars are and how do you handle the 2-point stop rule. And really, there's only a couple ways to handle this. One is the key. If we're going short right here, make this a little bigger. Let's say we're going short right here. You always have to put your stop above the signal bar, which means it's got to be up here above. You got 2 bar matching high, so it's got to be above that. If it was right here, you just got 1 bar. It has to be above that bar. It's always above or below, and if you're going long here, your stop has to go here. So it's always 1 or 2 ticks above or below your signal bar. And if that takes you more than 2 points, or it's basically 8 ticks or 2 points, then that's outside of our rule. So what you really have to do there is you might have to let it break above and drop a limit order a little further back in that bar to get within the 2-point rule and see if it'll come back and get you. But guess what? And when it's real volatile like this, the best trades take off and they're not coming back. Not even a couple of ticks, much less 4 or 5 ticks if that's what you need or more. So that's probably not going to work. So the other alternative is to go ahead and put your stop where it belongs and increase your scalp to a little bit larger to offset the bigger risk. So in other words, instead of going for 4 ticks, we might go for 8 ticks or 12 ticks. And it's a lot easier to get those extra ticks when it's real volatile like this. Look at all the big moves. They're easily going to get 3 or 4 or more points at just about every one of them. And you can see that over and over. Your big moves are all getting way more than 3 or 4 tick or points. I'm sorry. So that's your options. And honestly, I think I've said this before, but I don't worry so much about the 2-point rule anymore myself. But if you're a new trader, you got to be real careful with that 2-point rule because you're just going to give your money. You're just going to lose your money. When you get really good at reading the chart and you trust yourself and your winning percentage is really high, then you may not worry so much about the 2-point rule. It's just most of the time you're going to be able to get in within that rule, or at least within a tick or so of it, and then you can just add a tick or so to your target. But when it's real volatile like this, you don't have but a couple of options, and one of them is to uh, try to sneak in with a limit order within the 2 point rule, and the other one is to just if you're, if you have to increase your stop is going to be 3 points, then add an extra point to your scalp part. If it's going to be an extra 2 points, add an extra 2 points to your scalp part. So hopefully that makes sense to you, but that's what I recommend. So for those of you that keep, I keep getting that question, so it's probably it's a good question. So rather than try to keep answering, I thought I'd go ahead and just talk about it on the video. But let's talk about the trades. Um, we were trending up here into the in almost into the 7 o'clock hour, and we were correct, and we got a one leg down. We got two legs down, so there's a second entry long here. But the fact that this went all the way through the EMA, and it's questionable. It's real whether we had a close outside the trend line here. It doesn't, it's not a real convincing close, but maybe it is one. Maybe it doesn't matter the way the volatility's been. But you might have taken this long here on this second entry long, looking for it to retest. But the fact that it got below the EMA makes me leery of it. But if it wasn't so volatile, I'd probably tell you I like that trade, so I'll mark it green. But notice when it comes back up and it hits that trend line and it confirms it right here, and there's a fail, that's two attempts to go higher, so that's basically a failed second entry long. But notice that new low, and there's a first entry, and it doesn't go higher there, but there's a higher low, so that's a second entry short. It doesn't really matter about the signal bar here because it's like a failed second entry long. And so I like going short there. Quick, easy move. Then it bounces. You get two legs up, and then that confirms this bigger trend line coming across there. You can see that right there. And that trend line's working out perfectly. A second entry short right off the key entry point. You got to close outside of this short-term trend line coming up. That's a perfect, real small bar. There's no excuse to long way away from the EMA. That's the trade of the day right there. Because if you take that one trade that fits all the rules, very low risk, maybe 4 or 5 ticks in that bar at most, and if you catch that one trade, you can ride this thing all the way to the bottom, at least down to when it touched down here. And that's a lot of points. A lot of points. 2704 is the low there, and it's 2740 up here. So that's a bunch of points right there on one runner. And so that's the trade of the day right there. Easy to see setup, everything. And anyway, you make a lower high here, which is the less risky trade. The fact that one's off that key entry point, I don't consider that to be that risky. But if you wanted to wait on the lower high, it's right here, same thing. You could have ridden this all the way down. It actually broke higher, turned and went out the other side. Nice, another nice setup. I'll make this bigger yet. Okay, then we run down. First entry, second entry short right there, right off the EMA, right off the midline. Another nice move down. Then we kind of chopping sideways, but notice that new high, first entry, second entry. That's a failed second entry long off the EMA. Go short there. Another quick, easy scalp. Then it bounces. You had a second entry short right here, but you weren't really back to the trend line. And you could have known for sure. Well, I take that back. You probably wouldn't have known for sure this wasn't a trend line, but you could have had a really good idea because I found that off the lows down here, off these first couple of swings, and you drag it up. Originally, I had it drawn a little flatter here. There probably is a flatter one here, but it doesn't matter. But anyway, there's a second entry short right here, and we're kind of working sideways here, and you got a high right here. You might have looked at that as a failed second entry short, but it's right back into the highs, and I really don't like it. I don't like going short because of the trend line working up, and I don't like going long because it's back into the highs, and you see it would have failed real quickly. But unfortunately, there's not a good setup here because you can't really confirm that trend line is correct right there yet. So And even later, it wasn't real sure. You're just playing the trading range here. But anyway, it takes off, and you really don't get a chance. There's a lower high here, not a very good signal bar, right into the low of the day right there. It probably would have worked, but it bounces, and notice what happens. You get a first entry, a second entry, and it's broke higher. That's the place to go short. Then it bounces at the lows again, comes back up. Not a very good signal bar, but then it pushes higher, and you get a second entry short right there. Um, it's kind of a repeat of this right here, just all over, except it's a failed break higher too. A nice even more bearish bar. Go short right there. There's a lower high here, but that's just going sideways right in the middle of that range. You don't want to enter there. And then guess what? It breaks through, pulls back, gives you a first entry, tries to go higher again, and then gives you a second entry short right there. I like entering there. There's a lower high here, but by that time it's starting to look a little sideways. But then it pushes down and pulls back, gives you a failed second entry long. It's playing right off that midline. So we're probably headed to the lower trend channel line. I like going short right there. Failed second entry long, breakout pull back short, pull back to test the midline on this one and the bigger channel. There's a lot of confluence right there. And off to the races it goes. Another big, huge move down. And you could have got an easy runner there. There's some other pullbacks here, but we're just so far away from the EMA. We're starting to get close to the lows down here. I'm probably not going. You might have entered this one because you got a little double top, and it does. The only problem here is that you just overshot the trend channel line. There's a good chance it runs back in, but it probably was a trap right there too when it broke higher on that little bit of a higher low, and that way far away from the EMA, you know you're gonna have some bottom pickers. So you might take that one. If you see all the other reasons, again, there's confluence. There's a trend line there and a trend channel line that's now acting as support. That turns out in the end that it's a trend, it's a midline. At that point, it wasn't really a midline. We didn't have enough proof of that, but anyway, there it goes. And I don't think you want to try to enter down here. And of course, it bounces, and we're just kind of working sideways here. But notice how you get a double test. There's a bigger trend line running down through here. That's the first break outside of it. And notice that eye. You test it once, you test it twice. Look how bearish that bar is. You're probably not going to get in there, though. That's the sad thing about it. It would have worked, but notice how it gaps over right there, the EMA and that trend line, and you probably wouldn't have got in that trade. I wouldn't trust it coming back right there. So just let that one go. You do get a failed break higher here, but it's more bullish than it is bearish. And so I'd wait on a lower high, which comes right here. And then you got a big bearish bar. So I like that one. And it's right off the trend, that key entry point right there. And down it goes. And then we bounce. And notice the reversal pattern here. Moving up first entry, you push right on through the EMA, you get a second entry short, and when it broke higher, technically it probably was, I'm not sure, actually, no, I mean, it's not technically, or actually is was the word I'm trying to grasp there, but actually it was a second entry long when it broke right there. I don't think that's enough correction. It's just one tick, and there's about 3 bars. There's a lot of stem on both of these, so I would wait. And then it kind of pushes on down, and it's like a little failed break lower out of that little trading range, congestion area. And it closes right back up here to EMA, the trend line, and that's a second entry long. So I'd take it from there. And you can see how it does take off right there. This one didn't really fool anybody here. If anything, it's like a little... it turns out to be a short trap either way, but they make it look like it may be a long trap, and then they reverse it, and off it goes. So if you weren't in, this would be the place to get in. I don't see any reason to enter right in here, up near the upper side of what looks like the trend channel line. Turns out that's a midline again. But you got to be real careful going long right into that till we know for sure, and we don't know for sure till it makes the measured move up here. Actually, when we went on through here again, we probably know, but it's too late. You don't want to be entering way up here. It does pull back and give you a second entry long right here. And you could have taken that trade. I didn't mark it because it's still inside that trend line. You could have taken that trade. It would have worked. It should be at least green. And you could even argue for that to be red because this market has been really strong. And we're not back to the upper side here. Um, we do make a lower low here and a lower high. So even though that looks a lot like a double top and that is inside, I'd wait for a reversal type pattern. And we actually don't get it. It just turns down and keeps going. But notice that new high. Then first entry, a second entry, that's a failed second entry long right off the EMA. Go short if it breaks lower right there, which it does. And that's a double top there. And off it goes again. Bounces off the low side. Comes back. And we actually get a little close outside here. And it broke higher and then turns down and gives you that huge bearish bar. I like going short right there. And look at it move. There's a second entry short. Actually, that's not a second entry short. It's two legs up. It's a more of a hidden second entry short. But you're not going to take it down here after we just came off the low. It actually looks like we maybe overshot it. So we bounce, we come back, confirm that trend line. Not bearish enough for me, especially with the trend line still being there. But you get a close outside, pull back, and then you get this big bearish bar. I like going short. Then you get a failed second entry long. It goes higher and turns, it goes out the other side. Go short there. I really thought this thing would take on off, but it doesn't. We actually close outside here and start working higher. I don't like going long here for sure. Even though there's a failed second entry short right here. Notice first entry and you move up second entry. And a bullish bar. And it does kind of confirm that trend line. So you might take that one. I probably should at least make it green. But this thing has been so bearish. I want to see something a little more concrete. It looks more like a reversal. This looks so sideways across here, like maybe we're just hanging out a little bit before it drops lower. And guess what? That's what happens. We end up breaking lower here before we got another bounce. And even then we broke lower yet again. So you could have argued for that one. This one, you could have even argued for this one. We're getting, if you had room between here and these double top, you could. But I like it. Notice you got to close outside. You move to a new high, and you get that little failed break. I like going short right there. It's a double test. Failed second entry long. You already had a close outside and a new high. Boom, off it goes. There's a lower high here, and it's right off that trend line. You still got room to back down here. So it actually went higher and turns and goes out the other side. You could have just had your stop waiting there. Boom. Or you could have just went short below it. And then you get a break. And there's actually another second entry long here, but look how congested looking that is. That made me a little bit nervous right there. So I didn't mark that one. This is really your signal bar. Notice this is kind of an inside lower bar. So you don't want to go short right there, in my opinion. It would have worked, but you don't know that ahead of time. And then, of course, we bounce. And notice your new low, first entry, you push through. There's a second entry short right here. And it actually hasn't broke. When it broke higher here is when it became a failed second entry short. And look how bullish that is. And that looks a lot, very similar to this pattern over here. But I like that one. And off it goes. And I really thought we'd try to get to the other side of the trend channel back up here, but this thing is just really dead. And I just didn't see a good way to get into this short again. There's just no good setup up here that you really want to take. And you might have considered that one. Notice we're working down. You get a first entry and you get a second entry there. That's a failed second entry long that you might have considered. But look how congestive sideways with stems and dojis and things in there. And it bounces and, you got a bearish bar there, but it's a first entry and it's right at the 2 o'clock hour. I'm not crazy about it. Again, you could probably argue for it to be green. It is right off the key entry point. So, and that's what I saw today. And we're at 20 minutes again. So I was going to try to hold it to 20 minutes, and I got real close. But you can see the bigger two-tier channel, but you got to use this shorter term stuff. This is just too big because notice you wouldn't have had any more trades off that bigger trend line. You got one or two maybe off this midline. So the bigger one, just all it does is just give you the main trend, but it doesn't really help you find the key entry points. You need to narrow down to your smaller patterns. And that's why price action works at any, on any time, any level at the different levels, because there's trends within trends. Within this two-tiered channel, there's down trends, up trends, sideways trends. Sideways, you get a little bit of all of it. And, so watch for those trends within trends and understand that price actions, and you can narrow down inside these other patterns and find other trends and other congestion areas and sideways action. So, and this thing, really, from 2 o'clock, we were about 2,700, went all the way to 2,650 almost. We had almost a 50-point drop in the afternoon. That's pretty, that's pretty impressive actually for the ES. So this thing is still very volatile. Just be real careful if you're trading live. If you're trading on the sim, you need to be trading it and learning how to trade it on the sim if if you're not trading live. And you shouldn't be trading live unless you've already proven that you're a profitable trader. So I'm going to wrap it up. I don't want to drag it out. We'll be back again tomorrow to wrap up our week, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.